Director of Research at the Bahrain Center for Strategic International and Energy Studies, and Mr. Robin Mills, who I hope has joined us now, CEO of Amar Energy. Thank you, gentlemen, for joining us on this first week of the fourth quarter. Very dynamic energy markets so far this year, and arguably specifically in the last few weeks. Rustin, I'd like to go to you first, please, and address the sort of macro aspects of what we're seeing on oil prices in general, and stock builds, etc. We've seen, just to pick on one point, the API inventory numbers again came out this week, the second time that there's been a build in the last two reports, some saying it was surprising. Would you agree with that?
Actually, I'm not too surprised about the builds on crude, nor the builds on products. I mean, you are going to the seasonal downturn in the United States as we're going to the shoulder month from end of max gasoline into max distillates. But the inventory numbers are reflective of the fact that for the better part of September, the U.S. had 500,000 barrels of refining capacity that was offline. Crude capacity was coming back quicker than the refinery capacity, so you end up building stocks. The net delta between the offline crude and offline refining was about 300,000 barrels surplus of crude, and so the numbers are reflecting that build. Just the mathematics of the situation.
And will that now, I mean, at least whether it's sentiment or fundamentally, sort of ease the pressure from the remnant, I suppose, effects of Hurricane Ida, which is still there? I mean, at least on the refining side, obviously, they're being felt still.
Well, I mean, the impacts from Ida, I think, have been well relieved. I don't think it does anything to dampen the current pricing pressure being felt in the petroleum space because of the worldwide energy crunch that's going on right now. Nat gas prices extremely high. It's pulling up coal values now. Newcastle coal up $60 a ton in the last 2 days, which is unheard of for coal. When you think that was the most out of vogue energy source in the entire world, and now people need it because there's no other source of BTU around to keep their power, keep the lights on. So as that type of pull happens, it puts a floor under the whole entire energy complex and makes liquid petroleum even more desirable than it was maybe 6 weeks ago.
Yeah. Well, thanks, Russ and Robin. Just to go to you on that point, with what we're seeing, obviously, with gas prices. I mean, in the mid of winter, we wouldn't be surprised, but this has all come sort of, quite dramatically, maybe as a bit of a shock to the market. Perhaps, as Rustin mentioned, we're seeing, Europe and China, scrambling for coal suddenly and sort of dislodging the transition agenda, at least temporarily. What do you make of this? Crisis really in the energy market at the moment from a supply point of view and gas point of view?
Well, to say a bit of a shock is an understatement. It's a huge shock, and we've seen in the space of a year we've seen record low LNG prices. We're down at $2 an MMBTU, and now record highs at 35 and above, and European traded prices similarly. So really an incredible turnaround. I mean, there's a lot of factors behind this, but if we look at some of the effects of this, absolutely, we're seeing a real competition between Europe and Asia to attract LNG. Of course, most of Asia's LNG is still term, so the spot pool is relatively limited, and the prices in the spot pool, of course, then get driven up as everybody scrambles for what cargoes are remaining. Really, we've seen LNG. A real shortage of LNG FIDs in recent years, and then when that collides with even modestly increased demand, it leads to a real squeeze, and then the effect of the Russian pipeline supplies at the same time.
And I mean, and in terms of just sort of backtrack a bit to OPEC's decision earlier this week, probably no surprise to the market for the time being. They're playing it cautious, they're playing it safe. But how much is this whole gas equation complicating, or how much would it complicate their decision making in the next quarter in terms of the impact on oil prices, obviously?
Yeah, because the impact on possible extra oil demand, and that's really cloudy because this is a very weird situation where the LNG price is so much higher suddenly than the oil price. And you've got to really say, okay, realistically, how much fuel switching is there? How many customers are there who might switch from gas to oil? You'll see numbers thrown around of 500,000 barrels per day, but how much is that really? You can point to a few countries. If you take Saudi Arabia itself, if you talk Kuwait, if you talk Pakistan, that could indeed switch power generation back to fuel oil. Would we see industries, perhaps in China, switching to oil? It's hard to say because it is such an odd situation. But if we talk 500,000 barrels per day, well, OPEC is increasing by 400,000 each month. So 500,000, wipes out a whole month of increases.
And I mean, you mentioned China. Just to go back to you on that, obviously it's dealing with its several issues. It's got its financial issues. It's got the construction industry, the backlog with Evergrande, etc. There's a lot of things to decouple there. But from the power crisis point of view, it for once doesn't seem to be in full control in terms of its planning. Would you agree with that?
Yeah, I think the central authorities in China are probably often less in control than they appear to be, but this does make it quite clear. But it's important not to mix things up here. I think some people are mixing up, okay, China's having an energy crisis, is short of coal, is short of gas, is short of electricity, versus, China is deliberately trying to cut energy demand in various areas to meet its environmental targets. I mean, those two things are going in opposite directions, obviously. And if there is a downturn in the economy because of Evergrande, then the same issue, right? That ought to be cutting energy demand. So it's more, there's a generalized feeling of crisis without trying to separate out the different elements of it. But of course, absolutely, if China is short of energy, coal, gas, electricity over the winter, that certainly doesn't help Chinese economic growth. And it also feeds into all the supply chain problems we've been seeing globally, with the manufacturers struggling to keep up with orders and then shippers struggling to transport them on time.
Yeah, I mean, just to go to that point of supply chain, Omar, welcome again. Bahrain sitting here in the Gulf, we'll get on to some macroeconomic points on that and for the GCC in a few minutes. But just on that question of supply chain, I mean, has Bahrain itself been affected at all in its economy in terms of getting supplies, in terms of the day-to-day management and running of your economy? Have you been impacted or have you been all right?
Well, this morning, the Amazon order I made is out for delivery, so at least that's working fine. But generally speaking, no, throughout the COVID period, and including lately, there have not been any significant supply chain disruptions. But note that Bahrain's needs are much more modest than some of the other, countries you've mentioned. We're not, for example, an economy which imports raw materials and then produces intermediate manufacturers, then re-exports them and so on and so forth. Most of our exports are either petrochemicals, which are produced indigenously, or aluminium, which is produced indigenous as well. And then plus service exports, which are obviously with the tourism problems suspended. So there's not the sort of exposure to the disruptions. Then when it comes to energy, we're for the most part, almost 100% locally procured or locally extracted gas into combined cycle power plants. So it's not that these problems don't exist in the region. It just so happens that the configuration of Bahrain's economy and also being close to UAE, which is obviously an excellent logistics hub, certainly helps in terms of keeping everything moving smoothly.
And how have you been affected by your exports then? Forget about getting supplies into the country, but in terms of exporting the products that you produce from a shipping point of view, and we'll get onto that a bit more with Rustin, but clearly we're seeing very dynamic situation on a backlog in terms of container ships, etc., across the world. So has Bahrain specifically been impacted at all by the availability of that to get your exports out? Much needed revenue for your small economy.
Right. No, for the most part, exports have not been disrupted. A significant amount of, for example, Bahrain's refined products goes to the UAE, so obviously there's not going to be any problem there. Some of it goes to Saudi Arabia. Now, the stuff that goes to China, I'm not aware of any, and Japan, I'm not aware of any significant disruptions therein, but potentially further down the line. But for the time being, it seems as though all systems are go. And we actually had, the area, our region had a couple of trial runs, so to speak, with disruptions. First of all, we had in 2019, the fun and games, if you want to call it that, in the Straits of Hormuz, which obviously disrupted supply chain significantly. And if they didn't have any contingency plans in place before that, they certainly had them thereafter. We also had in 2019 the attack on a in the eastern province in Saudi Arabia, and that's very important for Bahrain because that's where we get a lot of our crude that we refine. So I think that already there's been significant investments made to minimize or to limit the impact of these kinds of disruptions, and so things should be okay for the near term. But if this, as Robin mentioned, if you're getting a situation where prices are gyrating from all-time lows to all-time highs in less than a calendar year, then you've got to be ready for the unexpected.
Yeah, absolutely. That's what this year and last year has taught us, certainly. Rustin, just to go back to you and to look at shipping in a bit more detail. We've seen the container market massive hike in prices there because of the backlog, because of lack of supply, because of shipping bottlenecks. VLCC market, is that going to start to make, obviously with oil recovering a little bit, where do you see the trajectory for the VLCC market and tankers to recover in the next, let's say, quarter or 2 quarters?
Well, with OPEC keeping the taps relatively tight, there's not much recovery hope for tanker rates at the current moment. There's still too much tonnage available versus the amount of cargoes available needing to move. High flat price does nothing really as long as there's demand for crude and people are willing to pay for $80 barrel oil, then people will ship the oil, but you still need to have a much larger supply of crude in order for tanker rates to actually rally and move higher. The high prices currently in the dry bulk sector are going to be here to stay for a relatively long time, as long as demand keeps pulling coal now and the other raw materials into production facilities.
And would you agree, not just for oil, but in general, that the supply chain backlog and bottleneck that has built in the last year may not recover till 2023?
I think that's an outside possibility that can happen because it's not only the fact that there's a backlog, but there is the structural issue of labor. Truck drivers seem to be in short supply around the world. You look what's going on in the UK, United States. They're saying part of the impact that, why isn't shale roaring back? They can't get enough drivers to move the mud and the sand and the other chemicals needed to extract to frack oil out.
I think Sean's driving a truck at the moment, isn't he?
You have to tell me. What about LNG, on the LNG front? We saw Qatar, I think, putting in an order or planning to build new age or new LNG ships again. That's obviously an expanding market. Where is that going? With what we're seeing today with obviously LNG, it may be just a blip, but is that a new trend where we're going to really see more infrastructure built for that, whether from bunkering?
Well, if the world is going to shift to an LNG-based economy, then you need to have about another $2 to $4 trillion worth of investment around the world in order to make that shift happen. LNG has its own special handling facilities, so you can't really utilize an oil terminal. You have to build new facilities for regasification. So all that has to be constructed. Qatar, yes, they're long natural gas. They need to keep that gas moving out in order to revenue it. So they need to buy more ships and build more ships. So it's not unheard of that they're doing it. The fact of the matter is that if they put the order today, they won't have the first ship out of the yard for another 4 years, if they can find the slots. So it is a bit of forward planning in order to meet their forward export needs.
Right. Robin, just talking about forward planning and forward forecasting, we had 2 or 3 of the big trader companies this week sort of confidently declaring where they see prices 12 months from now or going between now and then. And the average range seems to be the 75 to 90, which is kind of where we're at. Are you surprised that they're declaring that sort of range with such confidence? They may be wrong, obviously, but is that something unusual?
It's not unusual for people to have confidence predicting the oil price. It's unusual for them to be right, maybe.
Yeah.
Look, I think, people take the current oil price, and if they're kind of bearish, they knock off $10 for the future, and if they're bullish, they add $10, and it floats around like that. We had all the predictions that were done during the pandemic of where we would be now, and everyone had us down at $30 a barrel. I don't
agree with that outlook for the year ahead.
I don't put too much stock by the exact predictions, but look, I think directionally the real issue is the factors that are leading to this, and what is the balance of OPEC production as it relaxes its cuts. What can the other OPEC states, apart from the core states, will the others actually be able to bring back production? We're already seeing Nigeria, Angola, and so on hitting their ceiling. So there's 400,000 barrels per day of extra production each month. It's theoretical, and it'll become increasingly theoretical as other countries max out. Where will other non-OPEC production go, and particularly US shale? We hear a lot about capital discipline. I remain skeptical on that. Yeah, they are very disciplined at the moment, but with 6 months to a year of prices at $80 or $90, will that capital discipline really last? And then obviously, where does demand go, which is still the key thing. Demand overall getting pretty close to pre-pandemic levels, apart from air travel, and that's still the big missing piece of the picture.
And I mean, if US, we had a couple of speakers on this week talking positively about US shale, that it cannot hold back much longer at these prices. It's clearly profitable, and the players have diminished a bit, but there's enough out there that can add, and so that by the second quarter next year, we could be in surplus again. Would you agree with that? I mean, taking into account OPEC's planned increases as well, are we going to be reversing the situation in 6 months?
Yeah, I mean, if you look at the balances, indeed, they do show surpluses at some points during next year. There's a lot of moving parts on this. Those surpluses can very easily be wiped out by some of the factors I mentioned. But yes, I do think that at current prices, okay, I don't think US shale is going to go crazy like it did in the past, but there still should be room for some significant growth. It's still so much depends on the demand picture and when do we recover, or all these problems we're seeing, supply chain issues and record prices and so on, are those going to have a hit on demand, and central banks tightening down on an emerging inflation and so on. You could see the pace of recovery slowing down next year. But I think there are these potential surpluses, and that's why OPEC remains pretty cautious on how much oil it brings back, or how much it allows its members to bring back, let's say.
Yeah, and I mean, there is that inflation question is certainly going to be looming over the next few months. Omar, back to you. Let's talk about in the context of healthier oil prices and revenues for the GCC economies. Bahrain, is struggling with its sort of debt burden of 130%, I believe, of GDP, and you're planning to hike VAT from 5 to 10% in the new year. So tell us how the economy is doing then, and have these consistently strong oil prices given at least some relief? I know you're not the biggest oil producer, but in terms of GCC wealth, has that helped the country?
Well, I should say that we're not the biggest oil producer, but the part of the economic strategy is developing these big shale oil fields that Bahrain announced in April 2018. And we're getting to the stage where, at least certain elements of those fields may be operational in the near term. So there are ambitions to, vastly increase hydrocarbon production, all elements of the chain. And that includes also the gas fields, the tight gas, I think that's in the formations. But in terms of how the economy is doing in general, like most of the other countries in the GCC, the management of the crisis in terms of the health aspects has been generally good, and as a consequence, now you're getting the growth just from recovering things that were previously closed. So there's some more tourism, people are going to restaurants and so on and so forth. But there is no question that in its current state, the fiscal situation is unsustainable. Increasing VAT from 5 to 10% is probably, just to be honest, the tip of the iceberg. There's going to need to be some significant belt tightening beyond that.
Does that include subsidies on fuel, like obviously some of the other GCC countries have started to implement a while ago? Is that something that Bahrain can afford to do in terms of for its citizens?
So Bahrain, unfortunately, is for the GCCs is the leader usually when it comes to cutting subsidies and trying out some of these extra revenue generating methods. So Bahrain, I think, was the first country in around 2015 to start cutting the subsidies on fuel and electricity, and at the moment it's reached a stage where it's quite heavily means tested. And so therefore, if they're going to cut those subsidies further, it's going to be quite painful for ordinary families. My guess would be that they'll be looking elsewhere to try to generate or to bridge the gap. Where exactly remains to be seen. But subsidies, as you say, have a politically sensitive issue, and I would expect them to look elsewhere. And at the same time, as I say, we're waiting for the government to disclose what its sort of post-COVID economic strategy is, and that should be something that I imagine will happen in the next 2 months.
And does that include help from other GCC states?
So I think that's a given, to be honest, because I mean the reality is that there's two things to bear in mind relating to the Bahrain economy when it comes to the GCC. The first is that Bahrain economy, there is a contagion issue. So if Bahrain, features a crisis, and especially a currency-related crisis with a fixed exchange rate, there is a significant risk of contagion to the other economies. So therefore, that creates a shared interest in ensuring the health of the Bahrain economy. The second thing is the Bahrain economy is small, and therefore supporting it is relatively cheap. For example, UAE GDP is of the order of $650 billion, whereas Bahrain is of the order of $40 billion. And then there's, Saudi is even bigger than the UAE. So I think that the political calculus, and this is something which is reflected in the interest rates on Bahraini debt for the last 10 years, clearly indicates that the markets expect for assistance to be forthcoming, because it has been in the past, and because it's rational for it to come to the future, and because it's not very expensive to support the Bahrain economy.
Yeah. Well, I mean, we've got a survey question up there. Can the GCC economies as a whole bet on $80 average for Brent for next year? Yes or no? I.e., that's kind of where those traders sort of said where they see prices ranging through for the year ahead. If the GCC can bet on that, then perhaps in terms of strategic planning for their economies and otherwise will be easier. Clearly, they would hope for that. Rustin, just so everyone, just take a vote on that. Rustin, just back to you, and just shifting a little bit from a shipping industry point of view, and the sort of focus on the energy transition, which kind of got a big impetus during COVID because people had time to think about it, and we saw all the air, the skies clear and everything. And somehow this latest energy crisis has led to a bit of criticism of, oh, look, we're pushing that too fast. And, we've just got to deal with what's ahead of us. Would you agree with that? And from a shipping sector point of view, is the shipping industry planning enough and quickly enough for the transition in terms of fuels?
Well, I think the rapid decarbonization is something that the world's not prepared for, and I think that's all the talk is nice, but what really needs to be developed are clear, defined pathways to get from point A to point B. To go out and try to make us get to point B tomorrow is not a realistic situation. And if you look at what's gone on here, the current energy crisis is a melding of multiple inputs that have hit the world. It's not just a European, it's not just the Middle East, it's a worldwide phenomenon right now. And as we go into winter, it should put the caution flag up for a lot of different people around the world that stocks are low, they've been driven low, and if we don't do something quickly enough, it could be very, very dramatically painful financially as well as health for a lot of people around the world. If temperatures drop with La Nina forming in the northern hemisphere, that could really make it a cold winter, and it could put pause to a lot of the climate change talks that are going on, which is directionally not a good thing. Shipping is starting its own. The maritime industry is starting its own path voyage towards decarbonization. And part of what is the struggle right now is the multiple paths people are pursuing in order to achieve the goals for 2030 and 2050 laid down by the IMO. It's like we don't have a focus as an industry yet as to how do we get from our current petroleum-based fuel to some fuel in the future, so we can actually focus the investments, focus the technology, focus the trails to make sure that we can get there and get there efficiently with minimal disruptions. As of right now, it's you've got so many different voices toting so many different fuels that it's hard to keep track of which one's actually going to work. And and then my current or my constant refrain on anything is that how are we going to pay for the $4 to $5 trillion retrofit of the entire infrastructure system to meet future fuel whenever that's decided what the future fuel is?
Yeah, and I mean, and do you see any sort of better consensus forming within the sector on these decisions, right, in the direction? I mean, the IMO itself, when they changed the fuel sulfur on fuel oil a couple of years ago, it ended up going smoothly, but there was all this complaint about the fact that there just isn't consensus on direction or even what's going to be expected in the next 5 years so that shippers can plan and invest accordingly. Is there a solution to that divergence?
I think the solution is coming into a consensus amongst the industry as to how do we get there. And people have to look at it from a realistic point of view. You have to look at it not only from the fact of view, okay, what's the availability of the next stage of fuel? What's the logistics around that next stage of fuel? Can it get placed around the world where all ships are bunkering? What's the safety of that fuel in relation to the members of the shipping crew? And how safe can it be handled? I mean, can you do large-scale bunkering of ammonia in the middle of Rotterdam? If there's an ammonia spill, you could really have a toxic event in a major population center where most of the ships of the world are fueled currently in a major population center, because population centers grow up around ports. So it is, there is a lot of decision that has to be made and a lot of investment that has to be made in order to push the industry in the right direction and get things done. And at the end of the day, I've said before that the entire decarbonization is a massive inflationary push onto the end consumer, because eventually we are all going to have to pay for it.
Yeah. Robin, just to go to you on that point of budgets and sort of obviously investing. So underinvestment in upstream oil and gas is now today being cited as the number one reason why we're seeing what we're seeing today. It's not OPEC policy, it's not anything else. It's the sort of remnant result of the last sort of oil price crisis of 2014, 2015. With today's good revenues and strong forecast oil prices, where do you see the GCC economy, Saudi and the UAE being the strongest in their sort of commitment either to the energy transition route or reinvesting in traditional conventional energy? I mean, are they decided, or will they continue to flip-flop between the two?
I don't think it's a contradiction, and I think the GCC states have always been pretty clear that they were going to do both, really. So the amount of investment that's required for them to grow their production capacity, particularly in gas, particularly in oil rather, is it's large, but it's not that large compared to total investment. So, Saudi Arabia planning to raise, or Aramco planning to raise its capacity from 12 to 13 million barrels per day by 2027. Let's say round figures, that costs $20 billion over 6 years, $3 billion a year. That's pretty easily accommodated within Aramco's capital budget. So, really, they can meet the increasing call on their oil. ADNOC's got its own expansion plans as well. Those are the two big growers in the GCC, of course, in terms of oil. But then the others are the other side of that is investing in the partly kind of energy transition stuff. So talking hydrogen and renewables and so on, and partly I'd say the kind of oil sector defense stuff, which is trying to get more value out of the oil sector. So refining, petrochemicals. And if you look at the pre-pandemic capital plans, that's where the real capital spending was, multiple tens of billions on refineries, petrochemicals, both in the GCC and internationally.
And do you see that continuing?
Well, I think that came under major pressure in the pandemic, and large parts of it were, quietly put on the back burner. I think after
Now we're back to $80 oil.
yeah, but the oil price alone doesn't drive downstream investments, except of course that maybe more cash is available. So I think there'll be much more caution in what's done. Some of those projects will move ahead, but I think some will kind of be now quietly forgotten.
And I mean, do you expect, just before we wrap up, actually, we just saw our survey results come up. We had, Irene, if you can just bring that up again, we had a majority, 59%, saying that they can bet on that average, which is obviously a nice thing to have for the GCC economies. 41% no, yeah, 59%. Yes, just to quickly, Robin, just to go to you, we had an ADNOC Drilling issuing a bond last week, which was oversubscribed, but that was not a surprise, I suppose. Do we expect, again, a lot more, given where oil prices are for these oil economies, do we expect them to be going to the market for a lot more borrowing, or where do you see the trend line the next 12 months on that?
Yeah, we won't see a need to borrow in large quantities by the leading GCC economies. Oman and Bahrain will need to. Kuwait is a bit of a funny case because they're internal issues. But there'll certainly be project financing. But I think what you will also see is the ADNOC Drilling IPO, and there's more IPOs coming up. Fertiglobe is probably the next one. Emirates Global Aluminium coming up. So several big IPOs, and then these kind of strategic sales like the sale of the Aramco gas pipeline interest, which is also coming up. You'll continue to see that, I think, not so much as a cash raising measure, but as trying to measures to make the energy sector more responsive, more commercial, more flexible, bring in outside investment, but also outside ideas. So that's, I think, more of a driver rather than for those IPOs, rather than just raising $1 billion here and there.
Okay, well, thank you very much. I think we'll have to wrap up there. Robin Mills, thank you very much. Rustin Edwards and Omar Obeidli, thank you so much for joining us today. Just like to draw your attention there to our graph, their halftime talk. We have that now airing in the next couple of minutes. Mr. Muhammad Hussain, Ministry of Power, of Energy and Mineral Resources of Bangladesh. That will be airing in an hour UAE time, an hour's time. So please do tune into that. Thank you very much again, gentlemen, for joining us, and have a good day.
Thank you.
Okay.